Welcome to the Lego bricks of finance as a platform. To kick this off, I don't know all of your bios extensively, so I'll let you introduce yourself to the team. The laggard on the panel, Matthias, you can start.
Good morning, my name is Matthias Kröner. Good morning, bonjour. My name is Matthias Kröner. I'm the co-founder and CEO of Fidor.
Absolutely. Nick.
Hi, morning all, bonjour. My name is Nick Ogden. I'm the founder of ClearBank, and before doing this, founded another business called WorldPay.
My name is Fournais. I founded Saxo Bank with a partner 25 years ago, and we are really focused on delivering full services for traders and investors globally, as well as banking as a service.
And Gade, I'm founder and CEO of Cross River Bank in the US, involved in predominantly marketplace lending as well as payments.
Very good. So to kick this off, obviously the big news over the last couple of weeks in this region has been the open banking initiative in the UK. Much ado about nothing initially in terms of we did the launch, but it's going to take some time for the impact of this to occur. Having said that, though, we're starting to see more and more bank utility surfacing through technology players, third-party players, and so forth. This seems to be a trend. We talked earlier about China's mobile payments market. 92% of the mobile payments traffic goes through two non-bank players there, Tencent and Alipay. So this is definitely a trend. So let me start maybe with Mathis. We see a lot of non-bank FIs sitting on top of bank platforms, number 26, Moven, Acorns, Digit, and so forth. But what's the business model driver for a bank with a charter to work with fintechs like this?
Well, thank you, Brad, for that question. Well, actually, I think if I may see it a little bit out of my Fidor view, we are very much convinced that, for instance, a small team like ours cannot do any kind of invention on itself. So this is why we are, very happy to have contact with each of those guys here on the panel, by the way, because we need to be open culturally, not only technically, to listen to any kind of special concept which we can learn from, which we maybe can adopt on, which we can dock onto, which we can maybe seamlessly integrate in order to deliver this to our customers, which then would bring us to the Lego thinking or Lego philosophy, actually, that you have a series of components, you are kind of tailor-made, creating a tailor-made service for your existing customer base and trying to achieve the maximum value for your customers. That, by the way, is the major purpose why we would do anything. Value for customer.
Kim?
Well, I think Lego is a good old Danish solution, and I think it is really about the Lego, about creating a modularized client experience as well as the entire value chain. So I think clearly technology, new regulation, but also very much partnerships, because I think in the old days everyone tried to do everything for everyone everywhere. That's history now. It can't be done by even the biggest ones. So I think this collaborative spirit of really creating unique services for the clients are changing the world. And there are clearly a lot of innovative companies and people and solutions working on open API for kind of a common theme of creating win-win with the clients. It's going to change the world, and it's only just begun. So it's interesting times.
Now, for Cross River in the US, US is a fairly unique market, has a unique president.
Small.
Yeah, small market. What was the driver for you guys in terms of going down this partnership route?
By default, honestly. It's just that the core processors in the US are terrible and very difficult to work with, not providing the adequate solution that the banks are equipped to be able to provide a good product to the fintech companies. You do need a bank to transact in the US. Visa, MasterCard are imposing all transactions to go through banks, settlement banks. So we just needed to come up with our own solution. So we just acquired a few developers. We have now 50, and just develop our own products, mostly back-end, by the way. So deviating a little bit from bank as a service, more what we call bank as a platform.
So I'll direct this to Nick, Kim, and Jill, to you too as well. In terms of the regulatory response to this, we've seen a variety of regulatory responses depending on the markets you're in. Some markets tend to be a bit protectionist of the incumbents, others are aggressively, like Singapore, aggressively moving towards sandboxes for inclusions of fintechs. In your individual markets, how do you feel the regulatory response, what do you feel the regulatory response has been to this sort of change in posture with these fintechs coming into the space? Nick, do you want to?
I think two things. In 2014, I was standing at a conference not dissimilar to this, talking to our payment services regulator, and I asked the question as to why the UK hadn't had a new clearing bank in like 250 years. All we'd seen is natural market consolidation, which is the same in many markets around the world. And the challenge that I sort of threw up was that every fintech needs a bank. And the problem with this, the market as it was then, and still to a large degree is today, is that you immediately end up with competitive vibrations between customers of banks and the banks who see the customers as a threat to their market share. So I suggested that what we really need to do was to start again, think again, and have a neutral independent bank that sat alongside the incumbents. And so having taken that position, and my expectation was we'd never get this done. I was absolutely believed that there was a political or regulatory reason in the UK that had stopped anybody doing this before. And I was really surprised when the payment service regulator came back and said, well, actually, it's probably not a bad idea. If you want to have a go, have a go. And that's how we started. And so there was, from a timing point of view, 2014 was when the regulators, I think, were realizing that post the global financial crisis, they actually now had cleared some of that mess away, and they needed to refocus on market change. So I think that the UK regulators certainly are open. Even the Bank of England has a sandbox, and I think that's replicated elsewhere.
Kim, the broader EU?
Well, I think first of all, this is about reducing friction costs in the global economy, and people are tending, at least in where I come from, to divorce twice as often as they change their bank. So there's also a cultural perspective behind this, right? I think with the PSD2 and the GDPR and so forth, things are dramatically changing, and I don't think that this is really stoppable, because in the end it's going to benefit consumers, and business models are changing, technology are changing, regulation is changing, and I think actually regulators, they want to see competition, and it takes time, but I think there's a lot of good signs to that. So obviously that varies where you are, but I think it's a global trend, and I think it will continue. So I'm very positive on this. I think there are lots of also cultural aspects that needs to be dealt with in order to drive this forward. It's not only regulation and technology, it's really this partnership thinking that I think is not convenient for everyone to embrace.
And the US is, again, quite a unique market from a regulatory perspective, with state regulators and then federal regulators of varying ilk. So when you guys made the decision to introduce program managers onto your platform and so forth, how did those discussions go?
They're still ongoing.
Yeah.
8 years going now. And I don't think we have enough time to talk about US regulations. By the way, there are 12 bank regulators and federal regulators. There are about 50 state regulators, and each one has something different to say. Very different to coordinate all the desires of all these various regulators. I mean, obviously, it's a tremendous amount of challenge. The banks and I would say the primary problem, which is very different than what you may be experiencing in Europe or other jurisdictions, is the fact that at the end of the day, the regulators will always hold the banks responsible 100% for every single loan that is originated by a third party, or every single payment that is originated by a third party. And it doesn't matter if that entity is also regulated by, whether it's FinCEN, whether it's state regulators for state licenses. So the banks ultimately are holding the bag. We're the last line of defense. That's probably a little bit of a deviation from the rest of the world, I would say.
Very interesting. Now, Matthias, you've recently, of course, been acquired by a French group, but what is quite unique about Fidor in terms of your competitors in the region is that you operated not only as a bank, but you also operate as a technology company. So as a CEO, how do you, most banks don't think like technology companies. So how do you operate something that would intuitively, for incumbent banks, be a real challenge?
And Brad, let us be honest, in our preparation and email conversation, you said this is a kind of schizophrenic
behavior, being a technology and a banker.
Yeah, and why did I quote that now? Because I think this is what maybe majority of people will think like, that thinking in tech terms and in bank terms is schizophrenic. Out of my perspective, and I'm sure my colleagues would not, of course I'm not preempting any kind of discussion, but would not disagree. I think all of us, in particular, all of us, including you, by the way, we think first of all technology.
Right.
And we of course have something in mind, which is the customer value proposition. And then instantly we think technology, instantly we think processes, instantly we, as you just mentioned, we think APIs, we think code lines, we think how to make that end-to-end digital, how to deliver this in real time, what we at Fidor call 60-second banking, and so on and so forth. So I think at least if there is one major change in this era, as Kim just described it, it is that you need to be a tech entrepreneur if you want to deliver successful banking. This is my strong belief. And it's not schizophrenic, it's a sheer necessity.
Kim?
I just want to add that we put on the first white labeling partner back in 2001. So it was very much peer-to-peer. It was very much technology. It was fintech even before the term was invented. So I think it's also a mindset. How do you collaborate with other people, right? And clearly the customer focus is always, if we can't create win-win there, it's going to be a problem. But then it's about really technology and business processes to nail it down, right? And I think everyone who wants to succeed in this space needs to understand that, because if you don't, you kind of not in a good position. So it's also a distribution consideration, because for us, we have now 120 different financial institutions leveraging our infrastructure. So for us to extend our banking as a service throughout the value chain to other financial institutions gives us incremental revenues that we wouldn't have. And as it's a very scalable business, it's really another way of distributing, right? So you can go direct or you can go with wholesale partners. So I think that, again, is a mindset. It's a partnership thinking, but in the end, it's all technology and business processes.
I think the regulators are going through a big learning curve in relation to how, we turn up for meetings and we don't have ties on. And that's a real challenge for them. And I think the sandbox approach that they've started on was their first little step towards, talking to the aliens, if you like. But that's accelerating very, very quickly. Most of the regulator sandboxes are inundated with people wanting to talk to them, and so they're being forced down a path of knowledge, which historically they've stood behind regulation, compliance, and law, and said that's it, that's where we know. So I think the next 3 years, definitely, there's going to be a massive sea change in relation to opportunities, which may well be pushed forward by the regulators against the principal incumbents.
I want to drill down on something you said, actually, right? Because the CEO of BBVA quite famously, we've quoted this repeatedly, says, we have to become a technology company. And then you have HSBC recently appointing their new CEO, 30 years in retail, little technology experience. CBA in Australia just appointed a new CEO, was at great pains to talk about his digital experience and his technology experience. So let me ask you the question, to banks that are out there today, how important do you think it is that the CEO of the bank should be technology competent, and where does that take the organization over the next few years? Kim, you want to have the first shot at?
Well, I think, as I said before, it's completely essential, because without it, you cannot navigate this world, right? There are lots of new technologies, and AI, big data, blockchain. I mean, we could go on and on and on. And if you do not constantly see that you have to improve your win-win relationships with the clients, which means constantly disrupting yourself, constantly trying to be better. I think, really thinking a little bit like, the Amazon of finance. They were not here 21 years ago. Now it's the biggest retailer in the world. And it's all about customer focus and technology. And I think that our industry is exactly the same. That has not been how incumbent bank has been running their businesses for, I think it's pretty clear. But that's also why it's so interesting right now, because this transformation is not gonna stop until you created the best possible solutions for your clients, and that's all about technology and business processes. So it's absolutely essential.
I think it's deeper than the CEO. I think it goes right the way through the executive committee and into the organization. When you're setting up a new bank, you have to go and recruit grey-haired people to help you, because you need their expertise to satisfy the regulators that you know what you're doing. And equally, you then have to have a graduate program going to bring in the young people with the new ideas. Now, if you're a straight fintech, you only have the young people and all the rest of it. You have a real advantage. And I think that the whole market change in relation to the control from the CEO down in relation to their technology is critical in relation to the change. Those that don't adopt that, those historic banks that don't understand and make the IT change and learning, are wide open to be failures, frankly.
Yeah. Now, at Cross River, did you guys have an epiphany that that the strategy was changing, that you weren't going to be a big, consumer bank focused competing with B of A and Wells? And was there a moment when you guys said we really need to become a technology company, or was it more nuanced than that?
No, it's really by default. I mean, I can't say that we're smart, brilliant, that we have vision. It's just that we're nimble enough and small enough to be able to adapt to the new environment. And that's, I think, the key to any successful organization, any successful CEO. I think the role of a CEO, just to answer, to dovetail to what you guys were talking about before, I think the role of a CEO is really to know a little bit about everything. And if the strategic focus of the bank is technology, then obviously the CEO has to know what's going on. But at the end of the day, there is a market demand that is driven predominantly by consumers and new consumer aspirations. We just have to be in tune with those consumer aspirations, and the role of the banks, obviously as the financial engine of facilitating those transactions, is to be there when they need us. So it's not really an epiphany. It's not our epiphany. It's more the market's epiphany, I would say.
You're just responding to market opportunity. Yeah. So maybe Kim and Matthias, in terms of an org chart for a technology-first bank like this that you've built specifically for this purpose, architecturally and so forth, how does that differ from a typical retail bank where you have very product-led department structures, credit card department, wholesale banking, and so forth? Is the org chart different?
Okay, I start. Well, I think it's all about the client focus. So I mean, we really focusing on the value chain and looking at the clients we want to serve in the end. And then I think seen from a structural perspective, we really operate a global technology stack. And I think if you look at incumbent banks, they have different technology stacks for different regions and different product components, or even clients and so forth, where really we have a global technology stack. As I said, we focus only on investment and trading, so we cater for all global asset classes and instruments, and then we package it to the clients, but built on an open API layer that we've commercialized to fintechs as well, so that really you can tailor make the customer experience on your platforms. But then, a corporate action or execution and custody or clearing or whatever is really the same, whatever type of clients you have. So if you build an efficient machine that is kind of a cloud thought through in private or public cloud, and you can really scale that in 28 languages and cross assets, different currencies and so forth, you get operational leverage that allows you to compete. And I think that is very different, but that is not product focused, that is client focused.
Yeah. Do you think we're getting over the whole cloud issue?
But I mean, cloud, we have a massive thing. We've been operating private cloud since we started, and we're moving everything to the public cloud. And I think that's going to happen. I mean, it's a little bit like people are afraid for new technologies. I'm a pilot also, and in the old days they didn't have an autopilot, and when they talked about it, they got really scared. Now, if there's no autopilot, people won't board the plane, right? So I think
what do you fly?
Sorry?
What do you fly? I'm a pilot as well.
I'm flying a PC-12.
Okay, very cool. Very cool. Yeah. So you're in the cloud.
Well, I'm just having my kids' drones to fly. First
Yeah.
of all, I'm really
DJI
regularly,
Phantom
I'm
or-
crashing them, whatever,
Yeah.
I don't know. I crash any type. No, but so talking about the organization and the org chart, I think
Yes.
that was still open. And also the CEO related and tech knowledge capability question. I think maybe the org chart itself is not that much differing, but the magnitude of the teams is for sure differing to a normal bank. Yeah. So at Fidor, I can say that at least 60% of the staff is heavily directly related to technology. So there you can see a strong, let me say, focus already. And of course, we have something like risk management, compliance, and so on and so forth. But we also, maybe a change in that it's the way we are cooperating and the way we are organizing teams and the way we are describing the jobs. So even at compliance, we have somebody who is in charge for user stories. Because you have to, because if you think, and this is also a difference, that your infrastructure, which we call Fidor operating system, is a product. You normally cannot talk to a banker calling your IT a product. First of all, that is where it's already clashing. Second, if you think in product terms and productization, of course you need to have somebody who is understanding that, making it in a scalable way, making it in a kind of productized way, which means you can use it for any kind of a customer Fidor. Even compliance, risk management, all those teams which are normally called the back office somewhere hidden away, those guys even have to have a minimum or at least a very dedicated processual understanding, must define user stories, must find out how, for instance, we can use existing data in order to overcome fraud and all that stuff. So it's about everybody in the organization who must think in product terms, in tech terms, in processual terms, in data. Yeah, I mentioned data. So, all right. So it's a mutual challenge to everybody.
Data's the new oil, apparently.
Oh,
That's what people say.
yeah. Well, I think this is such a beaten track. We don't need to speak about it, but yes, it is. And the funny thing is, as always on banking conferences, everybody speaks about it. Nobody's doing something. So yeah, I just wanted to share one
With the
anecdote
exception of us up here, right? We're all doing something.
Yeah, we are doing something.
Yeah.
Yeah. About the regulator and sandbox, 2 years ago, I had a meeting with a no institution named German regulator.
I wonder who that was.
Yeah, and from Frankfurt, and they
Getting closer.
yeah, just that was my last hint. So and they came to Munich and wanted to talk about innovation in the financial services industry to me, and I was very pleased, if the regulator is coming to Munich and asking you about innovation. Yep. And I said, yeah, we're just coming from a meeting because we have this cooperation with Singapore about the sandbox thing. Yep. And then that was 1 minute, the minute one of the meeting, I had the first question: what is a sandbox? And I was really kind of shocked, saying, okay. And in my head, and hopefully they couldn't read it in my face, like, where do I start now, So...
Yeah, we had an interesting experience. We had to explain to them what a cloud was. So you guys were pilots. You know what clouds are. You fly through them. Mm-hmm. And we ended up getting 85 people into an auditorium in London. We had Sean Foley, who's the CTO of Microsoft's Azure platform, come over. I think we had all the regulators, all the payment schemes, everybody in this room. And we said, right, we're now going to explain to you what a cloud is, and we're going to explain to you what cybersecurity is, and we're going to explain to you why Microsoft spends $1 billion a year on cybercrime protection facilities. Mm. And then at the end of that, you can ask us any questions you like. And had we not stopped that after 4 hours, we'd still be there today, because the level of engagement that we got, and they really wanted to learn. And I think the trick is, if you're trying to do something innovative, get the regulators out of their environment to somewhere neutral with some interesting people, and they transform. They become, different people, and they really want to learn, and they are really interested in what everybody in this room is doing.
I think that epiphany that many of the regulators are having now, Kim, to your point about public cloud, particularly that platforms like Azure, AWS and so forth are now turning out, because they're getting pummeled all the time with security threats, that it's like an immune system. It's growing stronger and stronger to the point where now they're well ahead in terms of cybersecurity from the average bank architecture.
I think the biggest risk for the regulators that we've seen now is that the really good guys who get really interested and girls who get really interested in what you're doing then leave the regulator to go and join fintechs. So something's working.
What about in terms of cross-river? Do you guys have stuff in the cloud? I know your bank partners, your fintech partners do, but...
Yeah, we migrated to the cloud about a year ago.
Oh, you did?
Yeah, so we have a private cloud that we developed. We're exploring other things now because we really wholeheartedly believe in the cyber threat coming from quantum computing. And this is something that we're starting to pay attention to. So it's really the next level. And the problem is that it's a race to who's going to get there first. If the criminals or the terrorists are getting to quantum computing first, they're going to be able to hack into any single account. It doesn't matter how much money you spend on cyber security. Up until now, it's a game changer.
Having said that, I was speaking to the guy out at Cambridge who runs their quantum lab, and he was of the opinion, interestingly, that quantum at this point is not being used successfully to break encryption, but what it has been done is it produced extraordinarily strong encryption that is almost impossible in conventional terms to break. So that's a good trend, I think we're seeing with the quantum. But
I think it's interesting. In 1995, Jim Clark, if any of you remember Netscape, launched a challenge to say that his 40-bit encryption code couldn't be cracked. And actually, it was a team from a university in Paris who cracked it in 10 days. So everything's breakable.
So Nick, I want to sort of come back to your tagline for ClearBank is the first, in 250 years and your first new clearing bank in 250 years. But that sort of speaks to the fact that we are sitting on top of some pretty, I won't say archaic infrastructure, but very architectures and legacy systems with long histories. But now we have blockchain and real-time payment systems. We have artificial intelligence coming into this. So in terms of a lot of the fintechs that are coming into the space now, and financial, Tencent, WeChat in China, these guys, Orange, who we just saw, they don't have a traditional core in the sense of a traditional bank, but they're able to do a lot of the stuff that traditional banks are doing. So if you were to extrapolate this out 20 or 30 years, how much of the infrastructure that makes up the pipes and the plumbing of banking today that we see as essential, how much of that is going to be replaced by these technologies like blockchain in the future?
I think that there's two parts to that. I think there's the technology part and the market-driven part that we've heard about already with customers. I mean, global financial transaction banking is broken. Everybody in this room knows that. You don't get something called settlement finality from any bank anywhere. And what that means is that if I send a payment, I'm hoping it will arrive. I don't know that it will arrive. And if you go around in the hall here, there's some great companies saying, we're speeding up, we can get payments between A and B and all the rest of it. What they're really doing is they're getting the message across, which is the easy part, and then they're stuck with a legacy banking network to actually deliver those solutions. And if you look at the way that the global networks work, and you think, oh, well, they're 100% available because there's billions spent on them and all the rest of it, that's not actually true, because the banks that form the underlying framework that everything runs on are closed for 40% of the year. So you're kicking off at a 60% efficiency before you layer on all of the other challenges that they face. So there's a fundamental shift that's going to occur in relation to how transaction banking works, not because the banks have failed, but because the market, since the arrival of the commercial internet in 1994, requires transactions to handle at the speed of Google. We want things to go like this. We need to know where things are. The second part is that consumers are after choice. We're all in the industry in here, and we all talk tech, and we talk banking and all the rest of it. When we go home, we talk to our families about our consumer experiences and financial services and things that we need. And there's a big mix-up, I think, between transactional banking and our consumption of financial services. So I think over the course of the next 2 to 3 years, it's not going to take 30 years because the work's already started. Over the course of the next 2 to 3 years, you will see a number of very, very major, what I call utility bankers come to play. they'll be providing, and Saxo probably is hoping to be one of these, high-speed settlement finality rails around the planet, so that if you're in Sydney and you want to pay me £1, you can do it in milliseconds and it gets there. Alongside that, you're going to have a raft of new technologies. And I was talking at Davos last week about blockchain. Blockchain is very, very good for certain things. It's not yet good enough for transactional banking because it's too slow. Some of the verticals which are being developed within blockchain, I think, will encourage that speed up, but that's going to take a little bit of time. I think the other thing that's also then plays into this, which is between the transactional banking and the consumer, is the ability now to collect data which will be really useful for AI. Everybody talks about AI and how we're going to use it, but the data that we need to make AI valuable hasn't yet been collected. And so you've got a natural time of 2 to 3 years to start to collect this core data. So, we have a big AI project running at the moment with Cambridge. By 2020, we believe we'll get some value for that. So I think you've got a lot of different moving parts in the marketplace. The core transactional rails are being dealt with. They will be of massive benefit to the fintechs in relation to supporting consumer-facing customer propositions around the world. And then I think the challenge to the incumbent banks will be the choice of financial services opening up to all consumers. Because, we would all like, if we want to buy a car and get a loan at the best rate for us, not just because we bank with somebody or we know somebody. That's where I think it's going.
Well, if you look at that AI integrated into your daily life, solving a problem like buying a car, then it's not just a matter of plugging an AI on top of a core system. You need to have the data that understands the behavior when someone's likely to want to purchase a vehicle, their driving history potentially, all these other data points that aren't traditionally held in a core system of a bank. So be interesting. Kim, you had a point there too.
I just think in the end we all have to compete for the clients, and that's about the product, platform, price, and service in the end. And everything needs to improve. So right now we see a system of many banks who have been a product of mergers and acquisitions, and where really it's one big spaghetti network with old mainframes and old technology, and you need programmers to change stuff. You have to knock on the elderly homes to get them out, do the COBOLs and so forth. Of course, that cannot fly for the future. So I think it's going to change completely. It will be in the cloud, and the notion that every single financial institution should build their own machine is nonsense in a world of crowdsourcing, cloud computing, and everything else. So I think there will be, everyone will need to specialize and really integrate with open APIs to create that ecosystem that supports the clients and the value chain and all the regulatory and whatever needs that there are. So I think it will completely have to change. And if it will not, the people that do not change cannot compete on product, platform, price, and service, and they will be out of business. So I don't think there's any choice here at all. It's going to happen, and I think that when you see the first ones starting moving, then more will come very quickly. That's how it works.
So I know you got a comment there, Nick, but I'd be really interested in tossing this one at you, because in part of the research I've been doing for the new book, Bank 4.0, I came to an interesting conclusion. All of us here have been working on solutions that dramatically reduce friction in respect to day-to-day financial services. And whether it's at the clearing bank, or whether it's a retail consumer bank, or from a technology infrastructure perspective, it's all about that seamlessness and getting these new services out there. As we follow the logical extension of that into a sort of a frictionless environment where financial services are instant. When you walk into the car dealership, you have the options for finance available there. What happens to the KYC processes that are embedded in banking today and identity? Are banks even going to be involved in identity in the future? Kim?
I mean, the KYC is here to stay, but I think also we already are in so many databases, and so much is known of us. So I think it's going to be simpler and simpler, right? Because as an individual, people will know everything you do, right? Yeah. So I think that KYC
just
problem,
pulling that data together,
will be smaller and smaller, because in the end we will all be there. But when in this frictionless society, because I think it's massively needed, because really financial services is like the cardiovascular system in the global economy, and there's a lot of friction right now. and politicians are not so keen to reduce complexity and to reduce friction in the society. And I actually think that this thing is going to reduce it. It's going to be like tax breaks, right? It's going to be a much easier thing, but it will also shift the way things are done massively. So it will have a huge impact. But I think stuff like KYC and so forth, right now it's a big hassle because, a few years back it was not. And now, regulators change things dramatically. I think there's a good need for that, many good arguments. But I think in 5 years' time it's not going to be a problem anymore.
Yeah.
Brad, we discussed that in Singapore, didn't we? When we had the initiative by the MAS discussing whether you have a centralized database of your citizens that can be approached by API by everybody who is obliged to do so. I think that would ease things drastically. We see the development in India where everybody is centralized. Of course, this is kind of calling also for whatever kind of George Orwell scenarios on the one hand, but on the other hand, we see that banks are not operatively involved in the KYC process anymore anyhow.
Yeah.
We had this development to video ident. Now we are moving to full digital identification now. We are coming in German market, at least from the post office. It's super heterogeneous all over Europe. Every little country has its own KYC standard. So there's a lot of things to do, but I think at the end of the day it will take the same development as it has with the cloud banking, So yes, everybody first of all talks about it, then you see the group of people coming up that is scared about it, and then it's this kind of getting in an iteration towards a future-driven way, and with the KYC standards, I think it's the same. Nevertheless, urgently needed, because with digital environments, we of course see also an increase in fraud in any meaning, which of course needs a very, very serious check on your customers, what we call unwanted account openings, for instance. We even have a phrase for that now, so you see there's something like that is happening.
Just one quick comment. I think it's also KYCC, because a lot of us don't really know the end users, and we're still going to be responsible in the end. So we need to have that look through, or at least feel comfortable that those processes around it are okay, right? So it's not going to go away, but I agree, there are already many national databases that you can access for KYC, and of course that's going to be solved at some point.
Yeah, I think KYC is more of a governance tick than an actually useful service for us. It's something we have to do, otherwise we get hammered by the regulators.
Yeah, it's not a value add to customers.
The real useful thing is transactional analysis of what happens afterwards. That's where you identify all of the challenges that we face.
And heuristics
that's where
is going to be a
AI
big
plays
part of that in the future.
Well, actually, there's a value for customers. There is actually we are supporting with fiat currency clearing. Fiat is coming as a phrase out of the crypto environment, and we are doing the euro clearing for a Bitcoin exchange in Germany, and we forced the Bitcoin exchange to only deal with KYC'd customers. So, and you can see on the matchmaking, on the bookmaking, you can see who is a Fidor customer and who is KYC'd actually, because this is visibly reducing your counterparty risk because this person is existing. And for the first time, this is a value for me on the customer side that I know somebody did take care of that person.
Well, we won't even start talking about custody for crypto in
I just
Europe
wanted to pull it away, So.
Yeah. No, so let me, just to finish off, if you, and I'm sure you guys get this frequently, but talking to a CEO of an incumbent bank, and if they're looking at saying, who are the fintech partners and so forth that we need to be, if we're looking at artificial intelligence, for example, or technologies like that. So what advice would you give to an incumbent CEO about choosing the right partners in the field? Okay.
Well, I think first of all, integrating fintechs into traditional banking infrastructure is close to impossible, right? So I think in the end, it's about really moving the clients onto a new infrastructure, and then make sure it's open, so you're flexible. But this is as much a cultural thing than like anything else, because it's really people are afraid for making those decisions, but they have to. So obviously, find good and trusted partners. That's a good idea, but make sure it's built on open API.
I think if you go to customer service, that's the key point. And banks traditionally aren't very good at looking after their customers. So that creates a problem for them in effectively providing to fintechs a support mechanism to operate within. So I think it's a real challenge.
What about at Cross River?
I don't know, honestly. I think the incumbent banks have an issue because partnering with consumer-facing technology that is cannibalizing their own business is obviously a certain challenge that prevents them from exploring the partnership. So I would say I'd rather build than buy or partner. I think that's really, some of those companies are actually exploring either buying or building rather than partnering. So,
how long does it take you to go through that process of partnering with a new company that comes onto the Cross River stack?
So it's very different. We bring Fin into tech. We're not bringing tech into Fin, right?
Yeah.
So that means that we bring a host of financial solutions to the fintech companies, enabling them. So in other words, we don't touch the consumers. We're not interested in the consumers. That's their game.
Yeah.
An Apple, an Amazon, a Nike, a Starbucks, they won the consumer battle, in my opinion. The incumbent banks have a lot to worry about.
Yeah.
And what they're looking for is just to go up and down the vertical channel. Financial solution is the next big thing for them to acquire. So we're enabling that.
So I thank you all for your participation today. Certainly, I think we can say with some confidence that we're nowhere near the end of this journey, right?
Brett, but may I, you questioned us now for the last 45 minutes, and I'm really curious. We do not meet too often, actually, so using this on stage now.
You ever see him for once?
Yeah, well, actually, any news about Moven? Is there anything you can share with us?
That's a softball, right? Thank you. Actually, I do have an announcement to make. We're very pleased to announce exclusively at the forum today that Moven has just closed a Series C round with SBI Group out of Japan, and to form a joint venture for launching Moven to Asian banks based out of Tokyo. So it's a 20 million plus deal, at least at this point. Until it closes, it might be more than that. But and we intend off the back of this also to launch a full challenger bank in the US. So Cross River is going to have some competition, my friend. But Moven Bank is coming back in the US.
Wow, great. So congratulations.
Thank
I
you.
think free coffee for all of us at the bar. Just mention #Moven. And
Hashtag
it's on
Moven.
Brett.
Thank you very much.
Congrats.
Thank you very much. Thank you all.
Thank you.